Hi everyone and hi professor. Today we're going to explain about part 2 of 3M analysis. Yeah. Okay, I'm going to talk about the discount cash flow method. Next, please. So it's an evaluation method used to estimate the value of an investment based on its future cash flow of the project. So in this case, to use this method, it is important to mention that it was analyzed for next 3 years. I mean, the forecast was for 2020, 2021, and 2022. And the growth rates are 20%, 15%, and 10% respectively. It's because the sales of the company will increase potentially due to the COVID-19. Most people will buy 3M healthcare products, and also the perpetuity rate was 2%. And so we have the EV WACC is 94,000, and the equity is 59,000. So this means that if some investors want to acquire 3M, they will pay this amount of money. Next, please.
We are gonna compare and analyze the multiples of this company. Next, please. Every amount of this analysis are in millions of dollars. First, we calculate the enterprise value. And with this, we calculate enterprise value to sales multiples and enterprise value to EBITDA multiple from 2019. And then the next slide, please. We also add the competitive comparison of 2020. The first multiple, which is enterprise value to EBITDA, when it's greater than 10 times, it's considered that the stock is overvalued or the market considers it to have a growth potential. In 3M 2019 was 17.51 and now is 12.85. Both are within the upper range. This reflects a decrease, but prices continue to rise, and that is reflected in enterprise value to sales. The current situation is boosting investment in 3M in the long term. Its direct competitors are also in the high range except General Electric. In particular, the enterprise value to sales normally fluctuate between 1 to 5. The result in 2018 to 2020 of 3M, there was a decrease because and now there is an increase of sales due to COVID-19, and investors see as opportunity to buy shares to receive a capital gain in the future by selling them. Likewise, its competitor have this lower ratio since its market cap is much higher than the ratio. Between them is very similar except General Electric, since it's only resuming its activity to.
Well, company value using the market capitalization method. Well, the market capitalization of the 2019, we could see that we have the share price that we could find in any page in the web, that is 176.42, and the share outstanding, that is all the numbers of the shares, that is 575 million. So the multiply of that could give us a market capitalization that is 101 billion. So the importance of this is the analysis of the different methods. The analysis of the different. The importance of that is the analysis of the different methods to calculate the value of the company. So if we compare the multiplies and the market capitalization, we could see that there are some similarities of the methods that have a short-term data and simplicity for the risk for obtain them. And other things that is that these two methods could give like disadvantages. That is that is like to be difficult to be compared with other results. However, the value of the company obtained by the result multiplex method will be higher than the value given by the market capitalization.
Bond prospectus. 3M issued 3 bonds on March 25, 2020 in the United States with an outstanding status rating of A1, A positive and negative. The first bond was for an amount of 500 millions at a coupon rate of 2.65% and initial yield of 2.67%, with a price of 99.92%, and with an expiration date of April 15, 2025. The second bond was for an amount of 600 millions at a coupon rate of 3.05%, an initial yield of 3.09%, with a price of 99.68% and with an expiration date of April 15, 2030. Finally, the third bond was for an amount of 650 millions at a coupon rate of 3.70% and 3.72% initial yield, with a price of 99.66% and with an expiration date of April 15, 2015.
Well, the potential M&A acquisition summary, well, you could see the summary of American acquisition that have a total activity of 1990 and a purchase of 80 and a sales of 19, and the invest countries was 70, and you could see that the most largest sale was Altaris Capital Partner that is $650 million, and others that the company purchased was companies about medical equipment. That is, you could see Altaris, that is a company that invests in medical things, and Medtronic, that is a company that produces medical products.
We're gonna talk about financial derivatives applied to 3M. The first one, exchange rate risk. 3M also faces the risk of converting foreign currency earnings to US dollars. The company entered into a forward currency contract and options to hedge the impact of exchange rates fluctuations on cash flows dominated in foreign currency.
The second is interest rate contracts. 3M carried out a floating interest rate swap at a fixed rate to reduce the medium and especially long-term risk of increasing interest rates. This also has an effect on planning. If the rate is fixed, there is no risk that interest payments will increase.
In the forwards, the application of this derivative would ensure the sale of product at a certain price and exchange rate, which would be accompanied because in the uncertain future it would present variation in spot price. Despite not having a guarantee, the forward being customer-oriented, the risk of a default would be unlikely. It would present drawbacks in countries that try to restrict the type of contract, so that currency rate is not affected.
The company manages commodity price risk through negotiated supply contracts, price protection agreements, and commodity price swaps. The company may enter into other commodity price swaps to offset, in part, fluctuation and cost associated with the use of certain commodities and precious metals.
To conclude, by multiples, it can be only applied with a historical of the company and compare with similar companies. And those companies must share the same sector, size, profile, and etc.
3M opted different financial rebates to prevent and manage its future risk and take refuge in other assets.
The acquisition of different companies generate a value of trim and a specific control of different sectors in which it may be involved.
The company has invested in sectors that have grown in recent years, such as medical equipment. Due to the health crisis that we are experiencing today, the company is expected to continue growing and possibly acquiring more companies due to the sales of medical products.
Recommendations. We recommend that the 3M should promote their products in different markets, like was is the 3M company applies multiples. It should be compared and analyzed properly because these multiples will help them to avoid cumbersome calculations.
In case 3M in the future have problem with its cash flow and performance, it should continue to issue bonds to further improve its trade rating in the bull market and increase the attention and investment of investors.
3M could show substantial growth in coming years if it used existing derivatives to cope with the pandemic.
In order to achieve good acquisitions, it is recommended that secure the value of the acquisition by reasonable decisions on staff, an effective implementation of the acquisition strategy, and finally, keep in mind that merge and acquisitions are teamwork between companies. Thank you.